us for another themed week here on Property Tribes, and I am joined for this week by one of our most favourite commentators. It's Rowan, chairman of the Elite Investor Club, and we are calling this week Surviving in the New Economy. And Graham, it's lovely to see you again, and so much has changed since we last met up and you took part in our January campaign. And during that interview you suggested that landlords needed to stress test their business, and boy, were you right on the nail there. I don't know if you had a crystal ball or something, but clearly, you know, what's happened with COVID-19 and lockdown, it's been a massive stress test for all industries and all businesses.
Oh, absolutely, and I'd love to be able to claim some kind of foresight there, but sadly not. But no, I mean, this is one of these kind of once-in-a-century curve balls that's come along, and I don't think anyone could have anticipated it. But I think what we're actually going to see is that it's really kind of accelerating some trends that were already bubbling along in the background, but now they're really going to become mainstream. And I think there's probably hardly anyone in the country that won't be affected in some way. And I would argue that perhaps the higher up the kind of wealth and asset ladder you are, the more you're actually going to be impacted by this. So there's a lot that I think people need to think about and perhaps change in their kind of financial planning and business planning as a direct result of COVID-19.
Indeed, and we're calling this episode the Watershed Decade because that's what it's going to prove to be. And over the course of this Zoom call, we're just going to be kind of summarising your thoughts on what's been happening. And then as we go through the week, we are going to kind of dig down into some of the topics that you've raised, and at the end of the week hopefully come to some kind of conclusion of what people can do to protect and create further wealth during these very unprecedented times. But you mentioned how change had been massively increased and a huge velocity of change everywhere. Some of it's actually positive, some obviously not so positive, but ultimately landlord business models have been tested and weak business models have been exposed across the whole property sector. So in a way, Graham, it's kind of like a reset, isn't it?
I think it is, yes, and it's one of the benefits of lockdown. I think it's given a lot of people time to actually pause and reflect, either because they're furloughed or because they're just literally working at home and spending less time in crowded commuter trains. But I think it's been an important time to stop and think about where you are now, but also very much how you can kind of avoid the worst pitfalls of what's coming down and try and grasp some of the opportunities. And there's a great quote from a futurist called Buckminster Fuller, who says that people don't get out of the way of something they can't see coming towards them. And I think a lot of people can't see what's coming towards them in this decade, and therefore they're at risk of not getting out of the way and actually being knocked for six by something. Because at a high level, just to try and summarize some of the impacts, I mean, we've obviously had the health impact, which has been significant. But we've also had a huge economic impact. We've had something that very few people are talking about, that I've been on my high horse about for ages, which has been the kind of impact on our personal liberty and freedom from all this. Unprecedented changes. Politicians have seen how much power they can actually use, and the masses, if I can call them that, have been so willingly compliant that effectively a genie has been let out of the bottle here. Just like in 2008, the QE and money printing genie was let out of the bottle, and boy, has that gone on to become massive. I think what we've seen now is a move towards a lot more state control over our lives, and a seeming willingness of people to accept that without complaint. So again, I think we're going to see a change in our politics coming out of this. There's just so much that is massively accelerating in its change and its speed and its impact, that we've really got to be very, very careful that we are on the right side of these changes as we go through the decade.
So I guess what you're referring to is kind of totalitarianism.
Yeah, I did an interview where somebody said, well, what's going to be China's biggest gift to the West? Is it the Wuhan flu? And I said, no, I don't think it is. I actually think it's the totalitarian government, because this idea that you can simply close down the economy, close down the schools, close down public transport, effectively put everyone under house arrest. It has a name. It's called martial law. There was even a Monaco-based entrepreneur, Simon Dolan, who mounted a legal challenge against it. Certainly questioned the government's power to do this to us. Now, sadly, the challenge got thrown out predictably, but quite a few things were discovered there, that there was no legal basis for closing the schools down, for example. They were forced to release the minutes of their SAGE meetings on which all of this kind of dubious science was based, because really politicians have hidden behind the science and all this, haven't they? They've said, oh, it's not us, we're just following the science. Well, every decision they've taken has been political. Closing an economy is political. Keeping people at home is a political decision. And there may be medical benefits and so on, but let's not kid ourselves. These were political decisions. And so, I think it's important that we challenge these things and don't just meekly accept that the government can ride roughshod over us whenever it feels like it and just hide behind some science.
No, I totally agree. And I think, if we look at the government measures to support the economy through lockdown, we've had billions spent. And we've just had the budget today, the summer statement at the time of we're recording this interview, and more billions are being rolled out. And Graham, I have to ask, where is all this money coming from? We were in some level of austerity prior to COVID-19, and now the government has suddenly got billions to fund workers and furlough and bounce back loans and the arts and the economy, and it's just an endless deep pit of money. And where's it come from? I mean, obviously there's been a massive amount of quantitative easing, but somebody's going to have to pay for it. And I am very, very concerned of, it just seems to be this endless rollout of money and no indication of how it's going to be paid for and when.
Well, it's quite funny, isn't it? In a sense, we all thought we dodged a bit of a bullet in the December election when Jeremy Corbyn did not get in with all of his spending plans. Now, here we are with a supposedly nominally conservative government throwing so much money at things that, Jeremy Corbyn must be having a wet dream. I mean, it's absolutely incredible. So one of the things we have to now recognize, both in Britain and in America, is that there is no mainstream political party that regards itself as being what you could call fiscally conservative. They now, I think, have all suddenly become believers in the magic money tree. So, and I'll give you one example. Recently, Austria has just issued a 100-year bond offering a massive 0.88% interest. Now, the first thing you might be surprised at is that anyone would issue a 100-year bond, let alone at such a pathetic rate of interest. But the real surprise is it was 9 times oversubscribed. So the world is clamoring to tie up its money for 100 years at virtually no return. This is bizarre. This is free money. And so the governments have realized that they can print all this money with seeming impunity. They can solve all of the problems without seemingly triggering inflation or hyperinflation or Zimbabwe 2.0. The problem is, it's the biggest experiment that's ever been undertaken in public finances, and nobody, I don't care what guru you want to name, nobody knows how this ends. Does it end in hyperinflation? Does it end in a banking collapse? Who knows? It could be deflation, it could be inflation. I've been asking all sorts of very clever people. I can't get a clear answer from anyone. So yes, they are printing loads of money to pay these things. I'll talk in a little bit more detail about what's happening in America, which is absolutely incredible, and you couldn't make it up. But even here in Britain, the amount of money that's being committed and the amount of debt that the government is getting into is absolutely unprecedented, certainly in peacetime. And I have no idea how it's going to be paid for, except that I think the people in the firing line will be those at the top of the earning tree, the people that are called the wealthy, because it will be so politically unacceptable to raise things like income tax on the middle and lower income people, because these are all the new voters that got Boris in the first place. So I think we'll see wealth taxes, we'll see other property taxes, we'll see the loss of pension reliefs. All of these things are going to be in the back of the Chancellor's mind. It's just a question of when he fires those particular bullets. At the moment, it's all give, give, give. He's the most popular man in the country. Let's see what happens in his autumn statement when he perhaps starts to try and claw some of this money back.
No, I think that's a very good point. And if we think about the autumn, I think that is when we'll start to see the true fallout of the coronavirus pandemic. I've been likening it to a tsunami, and the actual coronavirus taking over the world, that to me was the earthquake. Lockdown was when the sea receded and you saw who was swimming naked, to use that famous phrase, when weak business models were exposed. But actually on the horizon, there is a tsunami. Now, I don't know whether that's 30 feet high or 100 feet high, but I do feel that this kind of feel-good kind of bit of activity that we're in at the moment, with everything opening up, pubs opening, people on furlough, not having to go to work, that's it's not going to last. John Howard described the government measures as like an energy drink for the economy, and an energy drink typically gives a very quick high, but then the low is equally as quick. It just drops away really quickly. So I think once we get into the autumn and the nights start to draw in and the true impact of coronavirus starts to be felt, I think we're going to be feeling very differently to how we feel today in the summer.
Absolutely. And I mean, that's a great analogy, but I think the problem is that people are taking way too short-term a view of this. If you think back, most of us are old enough to remember the 2008 crisis. And the reality is it was a 2008 to 2011 or 12 crisis. You were still getting great discounts on property in 2010, 2011. We've been on emergency interest rates for 12 years, so we never got through that bit. So we hadn't even gone fully back to normal by 2020 from the previous crisis. So I don't think we'll know the full impact of this one till at least this time next year, possibly longer. And you are going to see a lot of furloughed people never going back to work. You are going to see a lot of temporarily closed shops that never reopen. You're going to see businesses, as you said, whose business model has been exposed, simply unable to restart again. Now, that's going to cause a big shakeout. And then at some point, and maybe it's next year or the year after, I think there's going to be all sorts of interesting new opportunities will emerge, and people have to, start watching that and being, getting the antennae tuned to look for that. There will be opportunity, but I think first there's going to be a massive fallout from the tsunami, and that will mean unemployment. It will mean shuttered shops and businesses. It will mean pain for landlords as the holidays on mortgages disappear. And so the longer term effects of this, you have to assume it's been far more broadly based than 2008. So I think the longer term effects across the whole economy are going to be substantial. And just one metric I saw recently was a survey, I think by Fidelity, said that 71% of people who were planning to retire in the next 5 years have had to change their plans. So, for anyone coming towards the end of a working career, trying to plan for retirement, this sort of thing will be catastrophic. So we won't fully understand all that for some time yet. And all this talk of V-shaped recoveries, I think is just massively optimistic.
I am inclined to agree with you. And, if we look at, we talked at the beginning about change in the sector. And as far as property is concerned, there has been a massive shift in the use of property because we've seen people working from home, and it's now being talked about in the media, that businesses have realised that they can actually run businesses with people working from home, certainly for part of the week. This is going to have a massive knock-on effect to commercial property that was being used for offices. But then I guess by the same token, we've seen a massive rise in home delivery and the need for warehousing and logistic type businesses. So do you see there's going to be quite a bit of flux between resi versus commercial property?
Absolutely. I think there's going to be some structural changes in the sector, to be honest. I think it's very hard to generalize. As you know, people tend to talk about the property market as if it was one entity. It's actually, there's hundreds of them. There's hundreds of subdivisions of each one. So I think if I use one example to try and show the impact of this, let's just follow the money. Let's take an imaginary couple called John and Julia. Let's say they run a greeting card and gift shop in the Trafford Centre in Manchester. They're ticking along okay, they're getting by in January, February. Then suddenly in March, the government says, you have got to close. So in March, they are locked down, businesses shut it up, they're out of there. They cannot afford to pay their rent. So the rent does not get paid to the landlord. You look at Trafford Centre in Manchester, it's owned by a great big public company called Intu, INTU. They were, until not long ago, a FTSE 100 company worth billions. As this year has progressed, their rent has just about disappeared. They then cannot pay their funders. So suddenly, Intu goes into administration. It's become like a penny share, and now I think it's all been suspended. And then you think, well, who owns them and who owns their shares? And the answer then is, well, pension funds own them. And you go back up the line, and eventually, somebody else living in Birmingham won't receive a pension payment because their pension fund is not getting the money from Intu, that's not getting the money from John and Julia in their greeting card shop in the Trafford Centre. So, when you follow the money like that, you start to see the economic impact. And what about John and Julia's staff that are on furlough and may never come back? What about their suppliers that didn't get paid? Follow the food chain in that direction, and again you see how this sort of thing spreads. So it's a domino effect across the entire economy, and people don't realize that even their pensions might depend on commercial property. Something like most pension funds now have 10% in commercial property. So as all those offices are empty and all those shops disappear, people's pensions will get hit. And that's the wider impact that we'll only start to see in 12 or 18 months' time.
Well, no, it's very interesting to follow the money, Graham. I think that was a really good example. But if people's pensions are at risk, then it may encourage people to invest more in property. So, we just don't know how this is all going to pan out.
I've had doubts about buy-to-let for a long time, as you know. I think it's a very patchy market. I think you have to have a very clear strategy that will work. So, for example, anecdotally, I've talked to HMO owners who have predominantly got hospitality workers in their properties who've really struggled. I've talked to others who predominantly had NHS workers who've obviously been absolutely fine during this. So even your choice of client and tenant can be impacted to your returns. I think there'll be a lot of repurposing of property. And I think in a sense, as an investor at a higher level, you tend to think about property as an asset class, a bit like stocks and shares. But in the same way as I suspect there'll be changes in how people will invest in the stock markets coming out of this, I think property investment will become a much more selective process. So a little bit like stock picking. You'll no longer just say, I want to be in commercial property. You'll want to say that I'm in distribution warehousing, or I'm converting hotels into residential apartments, or whatever it is. There'll be new repurposing opportunities, or there'll be little niches that will continue to thrive. But you can no longer just say, I'm a landlord, I'm in property, or I'm in commercial, or I'm in residential. It's going to be far more nuanced than that to find a strategy that works in the new economy.
No, absolutely. And I think, risks have been amplified, and landlords are going to have to do a lot more risk mitigation in their businesses, newcomers, professional seasoned landlords alike, more intense tenant referencing, for instance. We've had whole sectors that have been completely decimated by coronavirus, and more intense due diligence on whether property deals stack up. And this is why we're really excited about the launch of our Landlord deal analysing software, because landlords are going to have to be a lot more thorough in their research and due diligence. As you said, it's not the game has changed. It's more high risk, even just a standard single occupancy terraced buy-to-let house.
Absolutely, yeah, and I think being on top of your numbers has always been important, but now it's going to be absolutely critical. So any tool like that can help you to really, I suppose, to professionalize your business and to be closer to the numbers and make the right decisions is going to help. But it's a top-down process. You need to think about which sections of the market you want to be in. Do you want to stay where you are and keep the properties you've got? Do they still stack up? Or do you need to look elsewhere, maybe even overseas, for things where you can get either a better yield or a better capital gain? Because a lot of things are changing in the market, and you need to be on top of that if you're going to continue to survive and thrive.
Well, fantastic, Graham. So we'll close this out now. This is the first instalment of our mini-series, which we're calling Surviving in the New Economy. Graham is my guest all this week, and he will be joining me for the next instalment, which we are calling The Lockdown Genie is Out of the Bottle. But we hope you've enjoyed today's instalment. Thank you very much to Graham. And Graham, I look forward to seeing you on a Zoom call tomorrow for part 2 of this themed week. And it's got off to a fantastic start, and we've got so much more to talk about, haven't we?
Absolutely. Well, thanks a lot, Vanessa. I'm looking forward to it myself. I'll see you then.
See you tomorrow.